hello face. Everyone put their war face on for face. Let's have a great week. Hello, Patrick, Reef, Left Shoe, how are you? Just want to give you a quick rundown of my thoughts in here. I'm interested in talking to the team. I believe Nick is going to be with us. I have an excellent interview with a great technician. Peter Goodburn's going to be with us. Hello, Kevin. How are you? Okay. So Euro-Yen has been the strength of the yen crosses, right? Well, they finally picked off the stops here. Everyone see this high? Give me a Y. See this high? So they elected all the stops here. The 4-hour looks a bit negative too. Some pretty glaring divergence. 1 hour still has some decent momentum, but I think we're in a topping phase between today and tomorrow. First target on the downside is going to be this 2380 zone. Besides having a moving average there, it's also the 2-week off number. So on Mondays, I look at what the off number is going to be, and I count back 2 candles. And we closed 2 weeks ago on Friday at 2386, so that's my first target. I have some confluence between that and the moving average. And here on the 4-hour, you could see that we're still under 70. But you know, there's an old expression. You stick with what got you there. Hi, Ron. So what got us there last week? The guppy, right? The guppy called from up here, said look for a rally to sell. You know, we've rallied back here. That may be enough. Maybe we're going to get an ABC, but I still think there are lower levels coming before we make a new high. Part of that's predicated on Blake's bias that we could get a high in the S&Ps. Also, Kiwi yen. We had the first break when Kiwi got killed last week. This to me looks like a failing rally. So you could probably, hi Ron, you could Ron the Dutch for Ron Gervino. You could pick your own poison. But I think even the strength, the relative strength, Euro-Yen is very close to rolling over. Give me a Y if you're with me on my analysis. So I think there's some pips to be made on yen crosses to the downside. Okay. Also last week, the pound Aussie was a great call. I shouldn't, you know, I should be more humble. Okay, I'll be humble. It was a lucky call that I made up here. And we covered Friday, said look for a rally. Didn't get much of a rally. Maybe we do, but it looks like it could be breaking down. But if there are opportunities around 74.80, I'd look at it. And now I want to get to the crew. Yeah, I'm going to get to the crew run. First of all, I'd like to congratulate Steve Volge for a couple of great calls. He had a lot of patience and stick-to-itiveness, and I think he had Stelios call the Russians and Saudis over the weekend from the beach in Greece to get them to come up with an extension of the deal. So Steve is being rewarded here. Nice shot, Steve Volge. Also, Steve Volge. They talk about catching a falling knife. Well, Steve caught it, and he didn't even get cut. So here you are. He was scaling in to the silver, and I bet he's at break even or better now.
Hey, Dale.
Hey, buddy.
Good morning, my friend.
Hey, buddy. Nice trading, Steve.
Thank you very much.
Also, Greg had a great call on the oil. You guys could just check it out here on this page. All you subscribers, Greg had a great call on that. And then Greg also had a great call on, and you had plenty of time to prepare for this trade. I love when you have time to prepare for a trade, don't you, Steve? Because you have time to think about it, and you wait for it to set up, and head right into an area you're looking for to take action, but EuroCAD was beautiful by Grega. He came in, thought 150 would be it. He's got to clean it up. Oh, it did. It ticked 50.07. So we could go 50-50 if the euro keeps going and CAD recovers, but even this was 70 pips from the first sell zone. And then I watched Blake's look at the week ahead video. How many of you guys listened to Blake's looking ahead video? A look at the week ahead. So I know Blake is leaning towards there's going to be a correction someday in the S&Ps. Some decade we're going to get a correction in the indexes
Someday.
I still think remember last week I said I think we could go for drive 3 up here at 2410. It's still possible, especially if the yen crosses can hold up and give us one more wave. And that's it. I mean, you know, the reason the guppy worked is because Nick was perfect on Euro Pound. What can I say? Great calls across the board by the whole F.A.C.E team. So Steve, go ahead. If there was something you wanted to say, I'm through. We're gonna have a great interview.
Actually, Gregor's call was by far the best. I mean, not only he actually caught the falling knife of oil, but he saw it through. I mean, he got a pattern in play that moved like 7 point something% and hit the target within 0 time. I mean, it was.
Yeah, I mean, the guy's he's excellent.
When everybody was looking at the oil chart and was totally scared,
right?
You know, he followed his wave count and.
You know what I say, Steve? Don't fade Grega. That's what I say.
For sure. There's no question about it.
So what's on your radar, buddy?
I'm actually seeing quite a lot of stuff. I like, obviously, silver. I'm in the money now. My cost average is below, I think it's 16.30 something. But I have to say that we're now hitting the first resistance zone. So, you know,
support.
No, we're now hitting the first resistance zone. After bouncing for silver, we're now hitting the first resistance zone. So this is a zone that we might see some pullback. Depends, of course, of what real yields do and what the dollar does. And the next target I have in mind is $17.2 per ounce, which...
That was your original target.
Yes. But keep in mind, as I said, that we're currently testing resistance, and we can see some pullback from here. I actually like the rebound, and I like the fact that the rebound initially started, you know, very slowly, and now it seems to be accelerating, to be picking up pace, which is always something you like to see, because people are going to start covering short positions now. I mean, mostly the acceleration, in my opinion, is due to people being short, thinking that, okay, perhaps we saw too much of a move, and or people that got caught shorting very late that are now having second thoughts.
I actually think we could even do a little better than your target, maybe around 1750-ish. Just arithmetically, but
we can if bonds play ball and the dollar keeps playing ball, we can easily do that, because don't forget that the precious metals are being influenced. Obviously, when we're talking about precious metals, we might not say it openly, but all of us open a chart of silver against USD or gold against USD, because if we pull a chart with gold against another currency, we're going to say so. You know what I mean? If we don't say so, it means that it's against the USD. Two elements that play a big role in the way they move is besides the usual speculation, but speculation is being influenced a lot about, of course, dollar is moving the pair because it's one of the components, but it's also about real yields, not nominal yields, real yields, because don't forget that people feel that when real yields are higher, the opportunity cost is higher, because if you have real yields 0 or near 0, it means that by holding gold or silver that don't yield anything back is actually not costing you something. But if you can get some return from real yields, then people perceive silver and gold to be more costly as an investment in a sense due to opportunity cost. So
penny wise, pound foolish.
I'm with you, but
I know what you're saying. You know, when we were in negative yield territory, gold had no opportunity cost, at least for Europeans, right?
Yes.
So, but I'll tell you, Steve, this last candle I'm looking at right now on the 4-hour, to me, smacks of a short squeeze coming that's might squeeze a short so hard their eyeballs will pop out of their head. So
it's likely, but as Greg likes to say as well, minimum expectations. You know what I mean? I mean, I see one resistance zone after the other, and I keep tuning in the position or the trade accordingly. So as I said, there is a chance we're going to see some short-term pullback from here, but if silver wants to remain constructive, at least in the short term, any type of pullback should not
take out 1635 or so.
Yeah, 35, 40, somewhere there. Yes.
Yeah.
Otherwise, it will start looking bad. You know what I mean?
Okay. So I think I saw on Skype Nick was going to stop by. Anything fresh? How are you handling Canada here with the big down day, big up in crude, big down in Canada?
You know, you remember that we closed the week by me saying that I'm a little bit worried about USD CAD because I didn't like the fact that I did not see yet an acceleration lower, and that looked like possibly
you could go to 880, maybe 618.
And obviously, I like the fact that we had the beginning of a second leg lower. As it seems, the initial target I had in mind, which is 136, is almost there. We're 6 pips away. So
that's where Blake likes it around there. He said last week around 36.
I totally understand. If somebody wants to be bullish USD CAD, and Blake and everybody has any reason to want to be bullish, because looking at the chart at the moment, there's nothing bearish. It was, in my opinion, short-term bearish because we had the confluence of the 127.2 up there and the channel resistance, if you remember, that I had shown. So plus the fact that we had like 11 up days in a row, some 10, 11, I don't remember, something crazy.
Well, then this would be an ABC, and what we have to analyze is the first, say the A was from that first high that you saw.
Exactly, the B was the triangle, and the C is the thrust that we see lower today.
Right, so where would 1.23 be of A if we popped at, say, measuring from 780-ish, which was that spike high last week? 1.23 of A. Or, you know, if it's really going to be a good correction, you might even get 1.618 of A as a fib extension from 780.
Definitely. But you know something, levels that I watch for support is, first of all, 136 is going to be paramount. Paramount. I mean, a close below 136 will start getting bulls very, very, very worried. So I'm still sticking with my position, but I'm closely monitoring what's going to happen with 136. If I see some strong buying interest, I will at least take 50% off and move the rest of the position to the other 50% to break even. But if we see that 136 doesn't actually provide any strong resistance, support, I think that the next level that can provide support is 135.20. Actually, the general zone between 135 and 135.20.
I actually have a 200 there on the 4 hour.
Yeah. So, you know,
Good
I
for
take
you,
it one level.
Tosin. We're glad for you. Glad you caught the downside of CAD. Nice work.
Thank you, thank you. It was a combination of factors that made me like it up there, and you know, it was one of those trades that I really like. You know if you're wrong very, very fast. So you take a small loss and you move to the next trade. But when you make it, you have way more to gain than your initial stop loss. So the reward to risk ratio is, you know, is very, very nice.
Yeah, LaShawn, I still have an AOL email address. Am I the only one in here? Anyone else? LaShawn is making fun of me, Steve. I still have an AOL address. Anyway.
that shows how long you go back, but that's not a bad thing.
I'm an old timer.
Experience is irreplaceable, honestly.
I'm your veteran. Yeah, you know, just call me coach. So also Tosin caught the short side of Canada.
Yeah,
and I know LaShawn has been short. So I think the community also capitalized on this decline. And I don't know how you feel, Steve, but you know what? I'm as happy for other people when they're right as I am for myself. You know, it's
Same
really,
here.
it's
Same
great
here.
to see.
That's why we're here. I think Blake has said it the best way, that you know, he's been striving for years to improve the bell curve. And when he's talking about the bell curve, he means, as you very well know, the statistics of what percentage of traders make it through the first few months is actually quite a low percentage, because
Not if they hung out in F.A.C.E.
Exactly, and you know, that's what Blake has said, and he has started doing like 15 years ago. You know, trying to educate people, to teach them how to
First survive. Here's my
mentally,
thing.
exactly, mentally, but also, you know, technically approach the markets, so you have an edge, you have a better opportunity of making it.
How about this? First, learn to survive, and then you'll thrive. You like that?
Exactly. Baby
All
steps.
Right. So, guys, write it down. Learn to survive, and then you'll thrive. If you don't have survival skills, you know, then you're knocked out of the game. And I know, because I've been knocked out of the game before. Okay, so take it from me. Learn to survive, and then you'll thrive.
Another friend is asking, I see, about the Aussie USD. He's asking me about it coming to previous support. Yes.
Yeah, why don't you show your screen, bro?
Okay, sure.
Yeah,
by the way,
they've already seen my squiggly lines this morning.
By the way, when Nick is here or Blake wants to speak or whoever, just tell me, guys. I'm just answering questions.
Just interrupt Steve at any time, because he does it
as always.
I can't stop.
He does it all the time, so you could do it to him too. All right, go ahead, bro.
Blake, did you say something, mate? You were quite low in volume.
Yeah, I said I can't stop yawning, so you're fine.
Sunday, see? Sunday is too much fun day.
You know what's funny is I actually had a Sunday Fun Day shirt on yesterday, which is ironically funny. Yeah. But yeah, I can't stop yawning. So Steve, you're good. I'm listening in.
Okay, perfect. So a friend here was asking about the rebound of Aussie. As you see, it has played out perfectly. This is the line we had drawn back then. So yes, Aussie is approaching the first resistance zone, which is the 74.50. But as I've said the other day, I would not exclude a move to 75. So anywhere between, so if you want to be on the short side, and this is a good opportunity for you, I've said it before that as long as we are below 0.75, there is absolutely no reason, in my opinion, the way I see the market, for somebody.
How about this, Steve? How about this? You know, people that want to be short, and this is a dilemma for traders, right? You're at a resistance zone, but you also realize that it could push maybe another 50 higher into a second.
You can scale it. Exactly.
Yeah,
if you believe in it, you can scale it.
Put a toe in the water. Say you normally trade a full lot, okay? Do a 0.3. It'll make you pay attention to the trade because you're in it. I know Blake, that's why Blake's always in the market 90% of the time because it makes them pay attention. So the only way you're really going to pay attention, you'll get distracted, but if you really have conviction about a trade, you put your toe in the water so you're keeping an eye on it. I guarantee you, if you're flat, you won't concentrate on it as much as if you have a piece on.
Wise words.
Go ahead. Go ahead, man.
Wise words. So yes, if somebody wants to be short here, this is a good area, the 74.50. Then this is a good area, the 75 of 10. We have a little bit above the 200 EMA. Anywhere below this, between above this zone and below, let's say, the 200 EMA, is still a valid zone to believe that the next move, the next leg, is also going to be lower. I mean, there's nothing bullish in the short term about Aussie USD. And if we look at the Kiwi, a little bit less so, it's a little bit less clear, but I would say mostly the same. On the other hand,
it looks like that. I don't know. I don't know.
Aussie yen and Kiwi yen. I'll tell you what worries me here. If you remember back here, we had drawn a target that perhaps it can go all the way here to 61.8.
Yeah.
The fact that we are retesting the highs after having a bullish engulfing day to day, of course it's still decently early in the day, so we'll have to wait a few more hours, tells me that indeed the pair wants to test this zone. So I wouldn't exclude a move higher in Aussie yen up to here to 85.60.
What's that, another 100 pips from here?
130. Yes. Let's say 130, yes, from here, exactly.
So you know what would be interesting, Steve, when you bring that up, is should that occur, I'd be very interested to see if Kiwi yen takes out its high from last week, and if it doesn't, that would be giving me a market message. I don't know about you.
Divergence, yes. On the other hand, now that you mention it, Kiwi had that huge reversal to the RBNZ that night.
Yeah.
But look where it found support in the triangle that, the little triangle that we created here, and we broke up to the upside. We came back, we retested it, and we seem to be also forming a bullish engulfing here. So a retest of 79 looks likely from what I see here.
But my contention is that even if you get 130 pips out of Aussie, we're still well over 100 pips away from Kiwi yen's high last week. I'd be looking for it not to take that high out, and I would key a sale on Kiwi yen based upon Aussie yen getting to that target, especially if Kiwi yen is not taking out last week's high.
You're absolutely right.
Face, you get it? Give me a Y if you get it. All right.
The reason I see the levels, I mark the levels, but the reason I have no position and I'm not looking to be in a position soon with those pairs is the following. I still maintain a bullish USD yen bias.
Yeah.
I'm actually looking to perhaps
buy
something like this.
Yeah.
Okay. And that is one of the reasons, as I've said before plenty of times, when I don't consider something a slam dunk opportunity, I mean, in the way I view the markets, of course, I just bypass it. So, for example, what I'm trying to say is the following. I'm monitoring like 45 tickers, okay? I'm looking to be involved with something, usually, if I believe that one of the components is going to be strong, and at the same time, the other component is going to be weak, or the exact opposite. So, ideally, I would want to buy, for example, I would want to sell Aussie yen if at the same time I believed that Aussie will weaken, which I believe it as probable, but if at the same time I believed that yen will strengthen, but I'm unsure about the yen strengthening part. That's why I'd rather trade Aussie against something else than the yen. That doesn't mean that I'm right. But since in my head that's the more likely scenario, I'm looking for other pairs to trade. As simple as that. Because, a very important fact is the following. If you enter a trade without being quite confident, you're not going to manage the trade accordingly. And it's very important to be decently confident in what you're doing to be able to execute it, you know, with the right approach.
Here, let me demo that for you. All right, here's how some people trade without confidence. Ready? Hope this works. Hope this one works. Instead of, okay, Mr. Market, challenge the market. I've done my work. I know what contingency is getting me into the trade, where I'm wrong, and if I'm right, what I'm looking for you. Go ahead, prove me wrong. That's the attitude I think that, you know, warriors, traders or warriors need to have, not, oh my God, I hope this one works. If you're clicking your mouse and you're hearing that in your head, you need to shut your platform down for a while and take a break. Okay.
I'm with you.
I just have my coach hat on today. I don't know why, you know, it's
that's one of the plenty of roles you can put.
I want people to learn, you know, not just, you know, be in good trades, but know why, and, you know, how that one day, you know, if, you know, when we're all on an island, Steve, you know, just mainly doing our own stuff, and, you know, ForexAnalytix is, we did the IPO and, you know, launching on the NYSE, so that people know how to do this and they could go, oh, I remember Blake talking about this kind of situation, or Steve talking about what you're, you know, talking about today, so that they have things that they can learn in here they could use the rest of their trading lifetime. That's, you know, part of my goal of this room.
Definitely. By the way, people should also pay very close attention to the DXY. Blake mentioned this in the next week's preview that we upload every Sunday. The DXY is getting close again to retesting this low, which also coincides with this support line. This is going to be a very, very critical level. A break below this trend line then leaves no other close nearby support. So the next move should be fast and should come at least from the 78.6 at 97.58.
You know, Nick posted a harmonic on that in the room, right to that level. I think it was 97.70-ish a couple weeks ago. So if you believed,
we might get it actually.
Yeah, so I mean, if you believed in that target, that bounce the dollar had last week was a gift. And
indeed,
you know,
this retest was ideal. Retesting, penetrating intraday, but failing to close above it, creating this overnight doji.
Top? Is that a spinning top?
Typically, you're right. It's a spinning top because it's not an exact line. It's a very, very, very small body. And then next day, boom. So this is an evening star formation, actually, those three candles, and this is a bearish signal for sure. And combining it with the rejection of the previous channel's support now acting as resistance was definitely a very strong indication that being long the dollar here was extremely dangerous. And that's how it proves to be for the time being. Euro seems to be very strong again. I mean, the fact that we still remain above the 200 EMA, that we still fail to fill the gap, and the fact that within a couple of days we've already retraced all the technical damage done within 4 days. I mean, the vast majority of it. If we don't get a turnaround, Tuesday, tomorrow, I see the next move being to this zone, which
111.
is 111.30, 111.20 to 35. I mean, there is a confluence of resistances up here. If you see at 111.14, we find the 161.8 of this move lower. A little bit higher at that 111.28, we find the 61.8 from the move that started from the top up here. A little bit higher at roughly 111.38, we find this horizontal zone that has acted plenty of times as support resistance in the past. So within 15 pips, we have 4 different resistances. So this is where I was looking afterwards to find the next target for the pair. Also, looking at the CHF, which is very correlated.
Yeah, that'd be interesting if the Swiss did not take out last week's low while the euro is making a new high recovery high.
Yes, exactly. And as you see, we had a false breakout of the triangle, but we found resistance at the exact same place we found the resistance the last time we rallied, and the rejection here was emphatic. And now we're retesting the 200 DMA. So perhaps a short-term pullback might come from current level, a short-term pullback, I repeat. So that tells me to begin with that this trend line is not so important anymore.
No.
So that's gone out of the window. And I'm just monitoring the horizontal levels. Still though, keep in mind that those ascending trend lines are extremely important. If I zoom out, you'll see why. So I'm not removing those out of the equation. Okay, it proved that this is not a triangle anymore, but that doesn't mean that the support trend lines that I've drawn here are unimportant. Actually, quite the opposite, as you see. They've worked for, one of them has worked for years and years.
I guarantee a lot of people went long the Swiss on a breakout of that trend line that doesn't mean anything anymore.
Yes, it does.
Maybe they're still long, and they probably put their stops under the low of last week.
Perhaps we'll find out. But I can tell you one thing for sure. A third retest of this zone, which will also roughly be testing this ascending trend line as well until we get there. A third test, if it brings a break, you should expect acceleration, because you know how it is. If a market tests multiple times a level, it's going to get rejected once, it's going to get rejected twice, it's going to get rejected, let's say, 3 times. But the more it gets rejected, the more interest, market interest, is being accumulated there. So if you get a break of that level, you will most definitely have series and series of stop losses being triggered, and more likely than not will bring an accelerated move lower. So honestly, being still long, let's say below, at a close below 98.50, will probably prove unwise.
Guys, can I interrupt for 1 second if you're done with this one?
Of course, yeah.
Sorry, I was about to interrupt before, but I had a baby emergency. So you were talking about the DXY before, and there's one chart I want to show, just one,
yes,
and then I'll give it back to you.
Of course.
Hold on.
Let me give you the...
yes, please.
There you go.
Hold on. That's it. Show my screen. There we go. You know, I was looking at your DXY charts and everything, and this is one I'm looking. Can you see my screen first of all?
Yes.
We got it, buddy.
This is one I'm looking at for ages now. It's a monthly chart. I always like to look at longer term periods.
The telescope, as they like to say.
And the amazing thing about this chart is that, you know, if you go back, you can see that this part here, this last part here, may be a false breakout. But if you zoom into that, the interesting thing is that the last 3 candles are all touching it. You know, they're all exactly testing it. So if it, you know, do I know it's going to go lower or higher? No, but in my opinion, if it goes lower, if it breaks it convincingly, this is going to be huge, I think. So this is the one chart. I keep tweeting about this. You know, it's, for me, the most important chart right now that I'm looking at. But it's quite interesting, even on a monthly scale. You know, you can see these little patterns, and it's, in my opinion, it's quite big. So,
yeah, and wouldn't you think, Stelios, if we negate this breakout, that 92.50, 92 could be a magnet?
Yes, I think that's the first realistic goal. I mean, it's going to be choppy. Dollar is always choppy, but I think, yes, this is where I would put a target for 92, 93, let's say.
Yeah.
So that just was something I wanted to share, which I thought
was a nice look, man. Okay. You know who you are. You're Galileo of Forex Analytics.
Yeah, I'm just a crazy Greek. That's it. All right.
Thank you, buddy.
No
Hey guys,
problem.
hey Stelios and Steve. Hey, if you guys haven't noticed, the euro yen is breaking higher right now. We cleared all those tops, and you know, it's going to be really interesting because on the week ahead video talked about the euro yen, what a shallow, you know, just very shallow retracements, and we were just kind of knocking our head up against that 124.50. Well, we're above it now, and we got to pay really close attention to it because you know, it could be just it could be a, you know, end up being a false breakout. I mean, it could, you know, just be taking the stops, but I think by the end of the day we should really focus on what this euro yen is doing, because this euro yen could be on its way to a lot higher levels.
You see 27?
I mean, it's quite possible. I'll take over the chart. You're done, Stelios, right?
I am done. Yes.
Yeah. Okay. Yeah. So you know, this is I was just looking at the dollar yen. The dollar yen's kind of, you know, just not getting a lot of attention at the moment. But here's that euro yen, and I mean, we rallied to that 124.50. This really key resistance up here around 124. Everybody's thinking double top, and now we are breaking higher. It's been a very shallow retracement, and you know, with the euro as bullish as it is, and you know, if equities continue to hold up really well, I mean, we could really start moving. So Dale, when you said like 127, I mean, you're talking about maybe the 50% retracement is at 129, and then yeah, the previous support here at 126, from right over here 126 and change. This is all doable, you know, right through here. You know, that's all very, very doable. And you know, everybody is expecting a pullback for May. You know, it's sell in May, go away. But how about if we don't get it? You know, how about if this market just grinds up, you know, into June, which is entirely possible if everybody's waiting for the market to turn around. Well, how about if it just doesn't happen? You know, you take a pair like the euro yen could very easily trade up to 130. You know, and then you can see that. You know, let's go over to the daily chart here. I mean, you know, these levels up here are all possible. I mean, I wouldn't have expected it to really rally through here, but you know, I think we got to pay really close attention to it now. It's very doable. So now as I mentioned a little bit earlier, Dale, I can't stop yawning. I don't know what it is. It's like I just didn't get a good night's sleep or what, but I'm extremely tired today. But the things that I'm keeping an eye on is I'm obviously keeping an eye on this bond market, because the bond market's trying to, you know, I know it's down a little bit at the moment, and it's come in a little bit because risk appetite's a little stronger, but I still think we need to keep an eye on bonds, because if bonds continue to rally, that will stop the euro yen more than likely from rallying any further. But see, you can see how the bond market is pulling back. That's allowing for yen weakness, and you know, hence we've got the euro yen that's popping higher as well.
So maybe just back to check the breakout, Blake. That's the area, right, that you'd be paying attention to.
Yeah. It's you know,
that blue moving average and down.
Yeah, that's a 200 period moving average. It's the only one I really keep on my screen, but it's you know, it's possible we could do something like this. And you know, I have an order to buy the dollar Canadian down at 135.75, and the dollar Canadian dropped to 136 and has bounced pretty aggressively. So yeah, I've been waiting for a move down here to get long. I just don't know if I'm going to get that opportunity. The buyers came in pretty aggressively as
your number. That was your number last week, 36.
Yeah, it still is. I mean, you know, the 136. I was hoping for a little bit, you know, more selling, just to kind of shake the trees a little bit more of the longs. But you know, I don't know. I'm now starting to question if we're even going to make it below 136. You know, buyers came in, and this is not typical of risk appetite. Typically, risk appetite, you'll see the dollar, you know, like, you know, stocks are rallying right now. You tend to see the dollar Canadian come down, but right now it's actually still bouncing. It's bouncing like we're getting some risk aversion. But then on the flip side is, it's not jiving. The correlations aren't jiving at all. Now you have crude oil coming off from the $50 level, and well, maybe that's what's weighing on the CAD. That could be realistically what's weighing on the CAD right now.
That's what took it down today, was a deal cut between the Russians and Saudis.
Yeah. So I'm right now. I'm really just more or less. I'm focused on bonds. I think gold and silver, although they're pulling back a little bit right now, they still look very constructive to the upside. The dollar looks weak. The dollar had a really key rejection on the underside of this trend line last week, at the end of last week, and the dollar looks vulnerable. It really does. But right now, I don't think the dollar is going to come under too much pressure unless the dollar yen starts to sell off, and that's not a guarantee in this market. The dollar yen is still holding up relatively well. So yeah. So anyway, I'm trying to really find some reason, to do any trading here. I was short the U.S. dollar Norwegian krona overnight. If you read the analysis from the only thing that I wrote down on Sunday night, because Sunday night I usually write notes like, okay, I'm going to really focus on this pair or that pair. Really, if you look at the U.S. dollar Norwegian krona, we had a really bearish daily candle. You can see that bearish daily candle right here. If you look at the, let me make sure that I'm on candlestick. Oh yeah, if you look on the weekly candle, we also had a gravestone doji. So we had bearish reversal candles for the daily, or bearish candles for the daily and the weekly chart. So the only thing I'm literally looking at my post-it note right now. It says Sunday, Monday, short U.S. dollar Norwegian krona. That's it. That's the only thing I have on there. And so last night I shorted the U.S. dollar Norwegian krona. I did a couple other trades too, but I shorted the U.S. dollar Norwegian krona at 8.56. I closed it this morning, and I actually sent out the chart on basic technical analysis here. When we came down to 8.50, I closed it out because I knew it was channel support. So I shorted it up here, closed it this morning, and then now I'm just kind of standing aside trying to figure out what I'm going to do. And I don't think there's a whole lot of clarity right now. It's okay to say that, Dale. And for years and years, doing the Morning Edge webinar, and every morning, I would have, not every morning, but most mornings, doing analysis and going through all the charts that I wanted to go through. I would have a lot of clarity. I would say, okay, well, I like the euro here. I want to buy it on a dip. I like the pound over here. I'm going to short it up this direction. Dollar yen, I think, is going to trade over here, and then I'll be long or short, whatever. There are days that I look at the market and I just don't have a lot of clarity, and it's okay when that happens. And right now is one of those days that I'm looking around and I'm not really too sure what to do. And if I'm not really too sure what to do, that's kind of, I cue into that idea that I really have to be very targeted on my entries. And unless I find the entries that I want, I'm less apt to be trading much. And that's kind of where we're at right
like great surfers don't try and catch every wave.
Yeah, that's right.
They too, they could be out there paddling around, and they have to be patient and wait for the right setup to get the best ride. Part of it.
Dale, since you live in Southern California, I spent the last year and a half of my Marine Corps career in Camp Pendleton, and so I used to surf trestles all the time because that's like the only place that I could really go not to get picked on by local Californians, and so just because I was on the base, but that is very true. I would sit out there freezing my ass off. I'd be in a wetsuit and be in November, and I'm because that's when some of the better surf conditions are. But I would be sitting out there. Yeah, again in a wetsuit, but I would be out there freezing, And even as much as I'd want to take every break in, just to get in, whether it's to warm up or just because I was sitting out there freezing my butt off, I mean, I would wait for like the perfect wave and the perfect setup, and then you got to do the same thing with trading too. And that was I look at it now, and the markets right now, it's like, okay, it's just not a lot of clarity. And if there isn't a lot of clarity, it's all right to be sidelined. Cash is a position, and again, we've had this conversation before, but I think most traders really struggle with the idea that oh, I'm going to sit in front of the computer. What do you mean I don't trade? I need to be paid for sitting here. Well, sometimes you really get paid just for waiting for that perfect setup. Look at the euro, man. Euro's so strong. Cable's not really following suit. Aussie, Steve was talking about the reversal here. Steve had been waiting for this setup I mean, if you look at his analysis, I don't know if it's still on ForexAnalytix because he had it all week last week. But I did some of the analysis for see, it's not even on here anymore, but he had on this chart, he had it set up to sell it 74.50. Yeah, yes, and I mean it came right up to that resistance perfectly. This is previous support, current resistance right up here, and the Aussie looks like a nice little setup to the short side, if you want to take advantage of that. But then the flip side is that you're buying the dollar, and the dollar looks pretty weak. So I don't know.
A lot of conflicting things. Bifurcated markets. A week, you have a strong euro, but this is probably just a bear market rally in metals and just a pullback in Canada. So yeah, you have a lot of things, cross currents working here.
There are, and again, not seeing a lot of clarity. Hey, I thought Nick Trades was. I thought Nicola Duke was stopping in today.
Yeah, that's what I saw on Skype.
Huh. Well, hey, okay. Dale, I've got to take a phone call.
I do have an interview in about 13 minutes. So.
Oh, awesome.
You're gonna like Peter Goodburn's excellent. Keep an ear open.
Yes, Steve.
Can I take the screen so I can show you something to give me feedback before you go? Okay.
Well, my phone is ringing. But yes, go ahead.
Thanks, Blake.
Okay. Just because a friend asked, there is a friend here that asked about the USD, and that is what I'm seeing in this week.
Yeah, it looks weak. It looks like it's going to break lower. It really does.
Not only that, if you see the short-term structure, it's exactly the same as the US dollar, a retest of the broken ascending channel,
right?
A double top, and if you zoom out and look at it like that, that looks to me now more like a bear flag than anything else. I don't know if you're on board with that. I mean, if that's your point of view as well, but I would be.
But I think below 1850, you're going to, or 1845, you're going to start tripping a lot of stops if we get up there.
I agree. I mean, for the friend that asked, I'm really worried about this. Everything in this structure now does not look bullish in any way. We got the descending wedge.
I'm sorry.
Bye-bye, Blake. Bye-bye, Blake. We got the descending wedge. We got the breakout of it, which, was initially bullish. At some point, we had to see some kind of a recovery. But the fact that we didn't even manage on the second attempt of a recovery to even pass above the previous high, and we're just retesting once again the broken channel and just roll over, I would be very, very worried if I was long. Very, very worried, honestly. I mean, there is nothing bullish on this chart anymore. Of course, somebody can say, okay, I still believe it's bullish. I'm going to put a stop loss below the low and just go long for at least another retest, let's say, of this trend line. Sure, the risk reward is there, but I personally wouldn't do it for myself. So for the friends that asked about it, USD in my opinion looks really bad to the upside if you're looking at to actually go long. Now there is another friend that asked for gold. Do we have the time to go over gold? Dave?
Yeah, go ahead. Because I don't think Peter's here. Peter, if you are here, send me a message, okay? Because I'm typing your name in.
Okay. So gold broke below the ascending channel, Needless to repeat the obvious, but you never know. Somebody might be here that wasn't there when we were saying it. We got a major rejection of the descending trend line that goes all the way back to the top, to the all-time high top. We just got rejected. We rolled over. We broke the ascending channel, and we seem to have found support at the confluence of the 78.6 of this move higher and this intermittent trend line that has gone through the 3 lows here. And I'm seeing a bounce. The bounce looks, for the time being, unconvincing. I mean, I would say that since we have a huge confluence of resistances here, the 50 DMA, the 200 DMA, the ascending channel support that will now be resistance, and this horizontal support resistance zone all pass from 1,247. I would say that there is no way I can be bullish gold in the medium term unless we see this level break to the upside. As long as we are below it, I mean, at a jump to 1,247, I'm a seller. It doesn't mean that I'm long-term bullish gold. From a technical perspective, at least for a short-term rejection, I will be shorting that level. So,
Okay, Steve.
Yeah.
You can keep going. Peter's not here yet.
Okay. Somebody else wants to have a look at anything else?
Any more questions for Steve?
Euro yen was already
someone's interested. Euro Aussie, someone's asking about. And I'll be back in a minute. I'm going to squeeze in a break while you're talking, okay?
Sure.
Okay, buddy.
Euros, we're still chopping around here. I mean, we obviously broke the very steep ascending channel. I mean, it was a certainty that we would at some point, even a short-term consolidation would break it. It's very steep, actually. Now, what happens from here? Today's candle is very, very bullish. There's no question about it. We may end up having the same scenario we had with Euro Yen, just a short-term consolidation and a move higher. It's not unlikely. I mean, this can prove to be like the previous one here or the previous one here, which was just 2 days. Just a bull flag, just another bull flag. It's not unlikely because I've said long time ago, and I warned while we were still testing all those trend lines. In my opinion, the euro has turned, and the vast majority of the euro pairs looks bullish. Now, I understand that plenty of people are looking to rejoin the proper side, but that doesn't mean, unfortunately, that when we request some pullbacks, I mean, ideally from a technical perspective, somebody would give a leg to get a move lower to retest this zone at, let's say, 144 and then move higher. But when the market is really strong, doesn't do you too much of a favor. So you need to be bold. I mean, if you still believe in the upside, you need to be bold. You need to take a risk. Otherwise, the market might run away. We'll see. We'll see. Euro Kiwi as well. Euro Kiwi from a perspective of Elliott wave could have even been an irregular correction. I mean, ABC, you never know. We might move to new highs now. I mean, when we saw that move, I hoped that we would get a retest of this previous peak at 155, but as it seems, the market had other plans. So we're again closer to the highs than anything else, actually. Because, somebody's asking for USD CAD. Okay, very, very briefly, because we've already gone through USD CAD. We said actually live that 136 is of paramount importance, and we were at that point only 6 pips above it, and as it seems, we did get a fast rebound of it. As I said, 136 is of paramount importance. As long as we hold 136, everybody can easily make an argument that this was a short-term pullback and then we will resume to the upside. I'm short, but I'm afraid that this might be the case. you need to see a break of 136 if you expect further depreciation. I mean, to test this level or to test lower levels.
Well, it's still a great trade, Steve.
Yeah, thank you very much.
Excellent analysis. Our guest isn't here yet, so Euro Kiwi, Sam. How are you, Sam? Nice to meet you.
We had a look at it already, Dale. Here it is, actually.
Okay.
That's the last thing I talked about. Now, let's also have a look at EuroCAD. People didn't ask for it, but since we went, through the rest of the commodity crosses, let's call them like that. Now we're getting some kind of a correction. But what kind of a correction is going to be, we have to see. I mean, it might be a chop, like we had a move lower, another move high, another move lower, or some consolidation longer term. We need to see how all those corrections are going to play out. For the time being, they don't look like they want to move a lot lower. So those crosses, all those crosses seem very strong, and they seem for the time being to just want to correct over time, consolidating roughly in the same levels, than do anything else. So I don't know. I'm very skeptical that we're going to see much lower levels than this. Euro pound, yes. I said last week as well that I would have to strongly think about what I'm going to do with Euro pound. The reason is because I don't like this choppiness. I don't like the fact that the right shoulder has been going on for too long now. And personally, at a close above 0.8550, I'm bailing out. I'm taking profits and just letting the trade be. I don't like the fact that we made plenty of efforts to break below the neckline, but this hasn't happened yet. So I'll probably take profits if we move a little bit higher, and only get involved again if I see another move to the potential neckline. Or perhaps, let's say, a test of this zone. We'll see. We'll see how it evolves. But I don't like this trade so much anymore. I didn't like it the previous week, and for every day we spend here without doing anything, I like it even less and less, actually.
Yeah, that guy Pinkert was talking about that.
Indeed. Indeed. You had asked me the question, actually, Dale, the first time, if I remember it.
Yeah. Just ate it, the way it ate into the gap. And
yes.
Couldn't fill it. And the whole world looking at, what Joe Granville said? And do you remember him? He goes back quite a ways, Joe Granville. He used to be like a very famous guy. He said what is most obvious is obviously wrong. That was his view of markets. So, like an ultimate contrarian type guy.
Absolutely right. And something, that's what worries me, like the oil inverted head and shoulders that everybody was watching. And when we finally breached 52, we were just sitting there and then reversed. I have the same fear about Euro pound. After some point, everybody started watching it. Everybody was waiting for it to break. And when that happens, as you said, most likely that move is not going to happen as easily as that. I mean, the market is not so kind, as you said the other day, with people. It doesn't give you such clean opportunities. I mean, it doesn't let you have so much time to think about it.
Steve, I hate to interrupt you. Can you give me a link that I could give to Peter to get in? He's having trouble getting in. No password has arrived. Then I gave him another link and nothing's happening.
Of course.
I think he registered for the webinar. Needs a password, which I haven't got.
No, if he registered for the webinar, he doesn't need a password. Nobody needs. I mean, if he simply registered for the webinar, the link he should register at.
Well, just give me a link so he could get in. I don't know. Anyway, I think this is the second time this has happened with a guest. So maybe you could Skype it to me.
I did in the common channel. Yes.
Okay. Oh, got it. Yeah.
By the way, another pair I wanted us to have a look is USD ruble, actually. Why? Because we had this break higher, which made it very interesting. And then we had a move lower. I expected that perhaps this zone would create some support on the rebound. But as it seems, we've come all the way back to retest the broken wedge resistance and support. So this is the place to expect a reaction if this was not a false break higher. So this is the place that if this break is real, we should see a move higher. And we definitely, to be sure, we definitely need to see a move above 57.20. So a reaction from here and the close above 57.20 validates the usual setup, which is descending wedge, breakout, retest of the wedge, and then the next move higher. Did he have any luck with it, Dale?
I'm still waiting. Let's see if he's here. Also, while we're waiting, I'd like to acknowledge he's here. I'd like to acknowledge Armand Shai. Armand's been trading with me for, I don't know, 4 years or so. And I have to give him credit for pointing my eye to pound Aussie, 3 drive to a top. Formation, nice call, Armand. We're going to do this interview now with Peter.
Okay, thank you very much, Dale, and I leave you to your interview. I'll be listening.
Okay. All right, Peter, I'm making you the presenter right now. So looking forward to hearing your voice and seeing your screen. And great call. Great call, Armand. Everyone congratulate Armand, especially if you were there for that 200 pip decline in pound Aussie last week. Armand originated the idea for me. I give him complete credit. Hi, Peter. How's it going?
Dale, can you hear me?
I can hear you, buddy. Nice to hear your voice.
Fantastic to hear yours. Yeah, I have things with you.
Wow, so it looks like we're going to 2,700, 2,760 in the S&Ps before there's any correction, huh?
Well, I just pulled this up because this is a bit of an old forecast really now. I mean, we've done so much on the S&P to the upside since last year. Last year was very important in terms of the markets, I believe, because, and I tell you, before I go into the details on that, it's somewhat overlooked what I'm about to tell you. I haven't seen anybody else pick up on this, but you know, there was a grand resynchronization going on between developed and emerging markets last year. When the S&P was, you know, down here at 1810, we saw corresponding lows complete in things like the MSCI Emerging Market Index, and of course the commodities too. You know, because everybody was thinking that oil would go down to 0 figures last year, and it was down at $26. But the turning point came, and that's from where the base of the oil price started to move up. But you see, there were so many different asset classes that were completing corrections all at the same time last year. Now, that's the first time that's happened since October 11, when the S&P was basically down here at 1074. Because during that entire interval that followed, right up until when the S&P developed this high around May 2015, there's been a dislocation between the asset groups, between things like the developed stock markets and commodities and emerging markets.
Yeah.
They'd all been, as you know, been working down for 5 years. So when we got to sort of January, February last year, we suddenly saw corrective patterns on the S&P. Let's mark that up. I'll just put this in red so everybody can see it properly. But we had this very nice simplistic 3 price swing decline in the S&P to 1810. And at the same time, we had oil prices, which began a much larger corrective pattern from their July 08 highs. That was the old record highs. They finished at $26 last year, but in the same pattern, basically a zigzag. This is an Elliott wave zigzag, 3 price swings down. And we had the same pattern on the emerging market index, and we had the same pattern finish in things like copper. We had oil, we had gold and silver complete corrections a little bit earlier, actually, around
the end of 15, yeah.
December 15.
And you know what, and I will acknowledge that you called that turn in gold at 1050, and you were looking for a high in the dollar, even though we got one more high up there around 100, and you were bullish the market down there, looking for, at that time, it's been so long since I talked to you, when we were trading down there, I think your old target was 2220, but we were in the 1800s, so that was another great call.
Yeah, that's right. And later, what I thought was very interesting about, you know, the way that we've progressed since then is, of course, you know, the uptrend developed here. What I'm pointing to now was, you know, a retracement in June 16, and then of course we had this is the cash S&P, so it doesn't actually show it as the futures did, but there was a spike down when Trump was elected.
Yeah, we were limit down that night, Peter. Ever see them bring S&Ps back from limit down during the
you don't see that very often in the S&P these days, do you?
I've never seen it, but you know, I guess Carl Icahn left the party. About $1 billion worth of futures.
Well, I mean, that's, you know, that there were certainly some big positions being played that night, and not always in the right direction, of course. And but you know, what's endemic with all of this is that here we have lots of different, you know, what seems to be global news events that have potential to change the direction of the trend, but actually the trend didn't change at all. You know, it's been ingrained upwards in that direction since the resynchronization last year, and it's still going up. Now, a lot of Elliott wave analysts, they've looked at the slightly larger picture of the S&P. Maybe I'll show you that, because there's something interesting that we can share with everybody listening and who might be still interested in the S&P, is that, let's just get an S&P.
Boy, it's great to see your charts again, buddy.
Thanks, yeah, I'm really happy to share these. It's great. Now, there's a little bit of an exercise in Elliott wave I'm going to show now, which is, this is the bigger picture, you know, and I think that, yeah, of course, I'm really bullish. There's a secular uptrend developing from the financial crisis lows, and it has to develop really into 5 waves. So what we find in mainstream Elliott wave and by a lot of practitioners is that they describe 1 and 2 correctly, but they more or less put 3 here into the May 15 high. This is 4, and we're in a final 5th at the moment. But I really don't think that's likely. And the reason is that, of course, Elliott wave has a few rules and quite a few guidelines, but one of the rules is that the third wave can't be the shortest wave. Well, but you know, it's not the shortest if the 5th is shorter. At the moment, the third wave, this one here, is actually shorter than the first. Basis a logarithmic scale. Well, not many people are using logs these days, and you really should, because that rule applies to logarithmic charts more than anything. So I'm just measuring 100% value of wave 1 to its extremity there. I'm just going to add to wave 2. And you can see that when we got into the peak in May 15, back here, we didn't actually reach even equality to wave 1, which is unusual. Now, there's about an 80 to 85% probability that a third wave will be larger than wave 1. This one's shorter. So I'm not prepared to play those odds at the moment because of 2 reasons. One is that statistically and probability-wise, the odds that third wave is going to be shorter than wave 1 is you're playing a small 10 to 15% minority probability. The other thing is that if it was a third wave here, the 5th wave would have to be shorter than the third wave to ensure that the rules that Elliott proposed, that the third can't be the shortest wave in the sequence, is correct, is adhered to. But, you know, when you match up the resynchronization process that we had last year in 2016 with the MSCI emerging markets, with oil, and with so many other commodities and commodity currencies, you begin to realize that there's so much more upside potential in the emerging market index, and we can take a look at that if you like next, because when you've got so much...
big move, and I'm interested in what you think, from people, in fact, let's see, who's that famous guy? Jeff Gunlich is, he has a pair trade where I believe he's buying emerging markets and short S&P, looking for a mean reversion.
That's an interesting trade, isn't it? I mean, as a spread, it's appealing to me. And in actual fact, this time last year, emerging markets were thumping up in a very strong outperforming role, but the markets weren't positioning for that because the markets had only just reversed in around February time. And you know, 3 months later, the market had outperformed. And that was just about triggering on the major global funds radar. You know, they were just beginning to start thinking, yeah, we should be following this. This is a strong outperforming trend. And since then, they've obviously exacerbated that trend, and it's been continuing outperforming since. And I think that's the right way to go. But I'm not sure I would put on a trade where I would short the S&P as a spread. Would you? I mean, it's not after looking at this. Well, I think if you work the numbers back, you know, and we say, right, okay, I mean, we could talk hours for this about how I get numbers up here at 4,400. Actually, it's quite simple. But there are correlations on the very long-term charts as well, which correspond to these upside targets. But interestingly enough, if we go back to the financial crisis lows here, and if I go up to, you know, this extremity peak and extend by 1618, which is a standard measurement I use for a lot of different things, look at what we get. We get this blue line. You know, this is the 4,400 number, 4397, and that technique of using a logarithmic calculation of the golden ratio 1618 there's a high recurrence probability that the S&P will eventually trade up to that. Of course, that alone is not enough. We have to look at the long-term pictures as well. If we're going to verify that as a valid number, and we perhaps would apply the same numbers to the Dow and maybe a few other indices to see if we get corresponding percentage increases as well, which is also important. Well, we completed all that work. It's been done 2.5 years ago, hasn't changed much since, and we're still on course to see a bit more. But the interesting thing is, no, I don't think that, you know, it's not a bad thing to have an outperformance in emerging markets, and I think we can do that if we take the relative numbers of this, where the ultimate targets are. Is that going to be
a function of a weaker dollar, Peter? I mean, the big debate now was that 104 it for the dollar? I mean, we're challenging some uptrend lines that we've broken down in the Dixie a bit, and I'm wondering if that's going to be part of the formula, is a weaker dollar, and that's why emerging markets may outperform just based on currency, because they were getting killed when the dollar was strong.
Yeah, that's right. I think that's absolutely correct, actually, what you're saying there, Dale, because, yeah, let's take a look at the MSCI Emerging Market Index. Let's put it up here. Let's actually put the bigger picture up actually first. This is it here. Now you can see, and actually this chart is very interesting because it's a template for what I used to call the inflation pot. When the financial crisis lows came in here for a lot of commodity markets like copper prices, for example, and they pushed up into 2011 in 5 waves, which is typical of Elliott's configuration for perpetuation of an uptrend. You get a 3-wave regression here, as we see into the resynchronization dates of last year, in January, February last year, and then the trend has to move up. Well, what we're describing actually is just a simple zigzag pattern. So for those listening with Elliott wave knowledge, a 5-3-5 pattern is a zigzag, and we have very specific measurements for that. And we've also got to insert the zigzag into the larger picture. But long and short of the results of this, it means that we have a target somewhere up at 2050. Now, it might take another 3 or 4 years to develop up there, but I would say I have a very high conviction that we will see numbers like that. Well, let's just do the math. You know, we've got 2050 as a target, and we're currently roughly 986. I'm putting this data in by hand, by the way, so it's might be a little bit out of date, but that's going to be a percentage increase of about 108%.
Wow.
108%.
Okay.
So if we go back to the S&P targets, let's go. So I should have saved that number, but let's just quickly go back to it. Okay, this is the S&P target that we had before. So let's get those away. And we've got basically 4,400.
Yeah, I mean, you have the most bullish targets I've seen. I mean, a lot of guys are saying we might be completing 3 here and we get a 4 and then we rally to 29 to 3,200. But this is the most bullish count I've seen.
Yeah, it's not, I mean, so, this is an 83% gain.
Yeah, this kind of ties in with that we could be on the verge of another screaming bull market in U.S. dollar yen, of tremendous yen weakness and tremendous risk on, and all the yen crosses, et cetera, et cetera.
Well, I tell you what, the dollar yen is going to be a very interesting one to try and figure out. I'll tell you why in a moment. Just to finish this,
Okay.
Just because I don't want to give everybody illusions that it's straight up, you know,
Yeah.
to these numbers, because we've actually got, I think, a very important target here at 27.66 coming in later this year, and then I think we're going to see a drop down to about 21.70. But if I'm not mistaken, that's about a 30% drop. Is that right? 27.
Yeah. 20, 25.
Yeah, okay, 20, yeah, that's right. Okay, so it's a bit less than on some of the others that I'm looking at. But basically, that's a fairly hefty whack, isn't it?
Yeah.
So we have to be aware that, you know, later this year, once we get to some of the numbers, we're going to take a bit of a whack to the downside. And we want to obviously be aware that we don't want to be involved or leveraged into that move. We need to be out the market for a while.
Good point, Peter.
And let that come down, just so, you know, we're not putting any disguises in. In the very short term, you know, I think that the markets are showing some divergence at the moment between the S&P, Dow, and Russell and stuff like that. So I'm actually updating our subscribers with a test at 24.13 this week, and then we'll take a look and see if it rejects. And if that does, then we're going to pull back down here before we go up again later. So these are very short-term movements now, but just to finish on that without misleading everyone, what's going on?
Yeah, well, you start with the telescope, Peter, and then you go to your microscope. That's your style, isn't it?
Yeah, I think so. I mean, I like to do, you know, I like to keep the charts, the Elliott wave counts, all synchronous. If something falls out and I can't figure out one timesheet into the next, then something wrong. So, you know, if anybody's really practicing Elliott wave, my recommendation is to ensure that, you know, you're looking at 4 or 5 time periods synchronously, and they've got to match up. Of course, you're going to have short-term variations in themes, which are consistent even within the next larger degree of trend. But I'd encourage everybody to look at long-term charts more, to get a fix, you know, where you are in the ocean sailing around. You might see tons of islands, you know, coming up, but you need to know roughly where your position and location is within that, and that way you'll get a much cleaner insight to what's going on than just concentrating on 1 or 2 time periods, for example.
Okay, thank you, Peter.
Yeah, so the currency situation.
Maybe we could touch on one currency that you have your eyeball on.
Well, I must admit that personally I'm still long dollars, but I think I might end up sort of holding on to them for a bit too long, because I'm not exactly certain yet whether the dollar can have one more flip to the upside. Now I say that because, in true honesty, because actually some of the critical levels are still hanging around, and I was hoping
97.5. Is that a big one for you?
It is. It's a very big number around that area.
Okay.
We know that from a larger perspective, let's just have a quick look at a cycle on the dollar. I'm going to now show you our longest cycle on the dollar index. It's this one, which we operate in our on our semi-annual sort of video series, and this is a 187-month cycle on the dollar index, and you can see that we've got a fairly good rhythm of highs and lows, peaks and troughs, over the last 40-year period. And sometimes we get a very accurate turning point like up here.
Were they like 8-year cycles between the two?
Yeah, it is, yeah, exactly. It's
high to low, 8 years?
Yeah, they have a rhythm of 7.8 years tops to bottoms.
Okay.
And they trip over sometimes. Like, for example, here on the last one, which was back in 2002, we had it about 9 or 10 months early before the market sort of built this double top area and then suddenly started to drop down. But it was about 9 months or 10 months early, and I think this is happening here because we're probably getting into about a year now late, and so the timing cycle for the dollar to start trending down is very late indeed. Now, you could argue that if we go back to the high that we had in January, which is here, that the dollar is already starting to trend down. So maybe that would have coincided with a peak on the 187-month cycle.
That was the weakest bounce off those cycles, Peter. This recent bounce in the dollar, if you go back to that other chart. I mean, you had much more profound rallies at the black arrows on the bottom. This is the weakest one.
Yeah, this is very weak. Yeah, I see what you mean. Yeah, so you got this one. Well, this one here.
Huge. Yeah.
That was huge. That was a fifth wave in the long-term uptrend that dates back to the American Civil War.
Wow.
So as a fifth wave uptrend, that was very big.
Yeah.
Now this one is smaller because it's basically a counter trend rally in a downtrend.
Right.
Which
Same
this
thing
is
here.
too. Same thing here.
Because I remember eventually, Peter, that when you felt the dollar would top, you actually had like a 50 target for the Dixie. Is my memory?
Yeah.
How's that for a memory?
Yeah, no, it's right. Brilliant. Huh? Absolutely fantastic.
I mean, when did that interview had to be a year and a half, 2 years ago, but for some reason I can remember these things. Yeah, there it is.
Yeah, that's the one you saw. It hasn't changed. You see, that stuck there. So at some stage, we're just gonna, we're gonna top out and we're gonna go down big time. So this is basically, we're in a downtrend for the dollar. I mean, of course, people are, over the last 8 years, we've seen this, so you get sort of brainwashed in it for a while, unless you look at the bigger picture. But we're actually in a downtrend, and I suppose a few chartists will draw downtrend lines a bit like this, They don't quite work.
Or they show it as a breakout. If they do,
they probably have that as a breakout.
Yeah, it's a breakout,
I think I've got this one in I think I'm using this in a log scale. Most of my charts are log scale, so maybe it looks a bit different with a linear arithmetic scale. But anyway, the main reason for depicting this as a counter trend, which has come also very close to the original targets, is because when we go back to the March 08 low here, just before the financial crisis got underway, and we go to that peak there, if I double click, it's going to extend by 61.8. Well, it's no coincidence that we've already hit that number. Exactly, look.
Yeah, 104.
Yeah. So the timing is getting critical now. So I'm not certain. I'm still holding on to dollars on myself, purely as a function that I'd like to see if it's going to break. I'd like to see a thrust below 97.50 here.
Okay.
There's another little chart which I'm working with where it's got again 97.53. This is support, where it could squeeze out a little bit lower and then turn up. But I want to see if to get really strong confirmation that the dollar's already in a major downtrend.
Yeah, it's do or die in here, isn't it?
Yeah, it is. We're going to have to break this number and then, really start punching through it hard. That's when you really know. There's no question then. it's in a downtrend, and then you can jump in, you know, and take that through, and you're then assured that you're always trading in the right direction, you know, wherever you enter it, whether you're a day trader or swing trader or an investor, you know, in currencies, you're always going to be trading in the right direction. If you get any short-term pull against your position, you don't have to worry too much, because, you know, it will only be a matter of time before it drops. But you need, first of all, confirmation that we're getting a strong thrust below that 97.50 level. Yeah.
Okay, we've been eyeballing that. So Peter, you did it again. Another great interview. Excellent views. I got to test my memory out to see if I was senile or I still could remember things. And I told everyone before you got in here that it was going to be, there were going to be some outstanding views, and we did it again. I really appreciate it. If you'd like, you could show your website now and how people can get a hold of you and consider your service.
That would be great. Thanks. Yeah, I've just put up this browser. Well, this is wavetrack.com, and if anybody wants to follow some of the things that we're doing, you can see that we put in twice a week some latest market commentary analysis. You can click here and read a bit, and sometimes we're putting in some interesting material for blogs. Some of our readers were looking at what do we qualify as reversal signatures. So there's you can always click on some links here to go to the blogs and read about articles. And if you'd like to get involved a little bit more and subscribe to our Elliott Wave Compass reports, you can just go down to here to EW Compass, and there's a bit of description about what's included in that report, and then eventually you can say order now, and it will take you to the link to subscribe online, and then you will get immediate access to those reports online, and you can even download a PDF which you can keep as a saved on your hard drive.
Okay, buddy. I really appreciate you taking the time out of your day, Peter. Good hunting, my trading warrior brother, and
Thanks.
let's not have the kind of gap, you know, like chart gaps that we've had in between our conversations last as long this time around.
No, it's great. We can do some regular stuff, and it's always great to catch up with you, Dale. I really appreciate it very much.
Okay, Peter. Everyone, Peter Goodburn at WaveTrack International. So thank you very much, Peter, and good hunting. May pips rain down on you and your family, okay?
Great. Thanks, Dale. Appreciate it.
All right, buddy.
Adios.
All right, so F.A.C.E, that's a wrap. Hope you guys enjoyed the interview. Great analysis. Thank you, Steve Volge. Thank you, Blake Morrow. Let's see who else talked today. Oh, Dale Pinkert. He babbled for a little while. You're very welcome, Kevin, Barry, David, all my trading warrior brothers and sisters. Have a great, no music today. Have a great afternoon. Enjoy your spring day. Hi, Hardianto. LaShawn. Okay, and I'm a friend. Okay. Good to be friends. And I think we're going to have an announcement on the winner in a few days of the ForexAnalytix giveaway. And I know everyone's dusting off their desk and polishing their desk because they want those silver dice. So thank you, everyone, for hanging out. Nice trade, Armand. And we'll see everyone for Turnaround Tuesday, see what the market offers us tomorrow. Maybe the picture clears up and Blake has some conviction tomorrow. We'll see if we get a Turnaround Tuesday. I'll do a little scouting for a Turnaround Tuesday candidate. Yes, Daisy, all of our broadcasts, the session as well as the interview are recorded. Yes. Okay. Adios. See everyone tomorrow. Remember, don't just count your pips, Daisy, Vito, George, David. Count your blessings. See you tomorrow.